Are you a real estate investor looking to sharpen your skills or a newbie looking to become one? You're in the right place. Welcome to Where Should I Invest? Real Estate Investing in Canada with your host, Sarah Larbi.
Welcome back to another episode of Where Should I Invest? My name is Sarah Larbi. I'm excited to have you back on another great episode today. But first, before we get started, just thought I'd give you guys a little bit of an update. And by the time this airs on Friday the 14th, actually that's going to be Valentine's Day. Well, happy Valentine's Day. On the 16th, I am doing a free webinar with my mortgage broker, Dalia Barsoom. So don't forget to tune in at 7 p.m. And also, if you're in Ontario, happy Family Day weekend. So super fun weekend. Excited also to start my second cohort of the BRRRR small group course. And that one starts February 15th. It goes all the way to May. And so it's a mix of online live interactive calls as well as in person. So super excited to have the new cohort start, and had tons of great feedback from the first students. Absolutely love the course. And to me, it's important that I ensure everybody has the information that they need when they're done the course and the contacts that they need when they're done the course. So if you guys are interested in the BRRRR course, depending on when you listen to this, it might be too late, but I am going to be doing another one in the fall. So if you are listening to this on the first or second day that it comes out, there might be a few spots left. Just check out my website, or you can send me an email, sarah@sarahlarbi.com or sarahlarbi.com, and then just go to the BRRRR tab, and then you'll get some information on that and when the classes are taking place. On that note, guys, I have a great guest today who is I don't know if you guys have heard of Lane Kawaoka. He is a real estate investor out in Hawaii, and his portfolio consists of today 2,100 units. Really cool. He's also a writer for Forbes. He's got an Amazon bestseller. This guy has done tons of great information. Lots of great things, and he shares some great insights as well. And he still works full-time as a civil engineer and invests passively in Honolulu, Hawaii. So once in a while, I just like to bring different types of investors from the US, from Canada. I mean, I think once we've had somebody from Morocco, and it's interesting to see how the other markets they work, right? What the numbers look like, what are the strategies out there. He also invests in across really the US, right? Alabama, Georgia, Indianapolis, Oklahoma, et cetera, et cetera. And he's got multifamily and some few single family homes as well. Tons of great information, and let me know if you guys enjoyed the show today with Lane and what your feedback was. And I will say I enjoy getting your emails. So if you've taken the time to send me an email or an Instagram message, thank you. And thank you if you've also taken the time to rate and review the podcast. So thanks very much for tuning in again this week, and see you next week. Welcome to the show, Lane. How are you?
Hey, thanks for having me, Sarah.
Super excited to have you. Now, you are coming and speaking to us from a really awesome place, and people that know me know that I love the warm weather. Where do you live right now?
I am in Honolulu, Hawaii.
Hawaii.
Out in the Pacific Ocean.
Nice. I feel like the next question should be, do you surf?
I actually don't. I was kind of a geek in high school and elementary school. I just studied a lot. That's why I'm an engineer. I don't really like the water.
So did you grow up in Hawaii, or you moved to Hawaii?
I grew up in Hawaii, and then I went to University of Washington for college.
Okay.
So pretty close to you guys, but no, I'm not a surfing kind of guy. I mean, I know how, it's just like how a lot of, people up in the mid or upper Midwest, like they know how to hunt. They just pick it up. I know how to boogie board and surf, but I don't do it.
It's not your main hobby. What is
not my thing?
No.
I don't know. I just invest in real estate. I need to get some hobbies,
I know, right? So okay, so let's talk about real estate, and then we'll go from there. But before, when you did have hobbies and you were starting in real estate, how did you actually get started and why?
Yeah, so I'm kind of like a lot of working professionals. I started as an engineer. My parents told me to work hard, study, get a good job, but they didn't tell me was that I was going to be at that job for 50 years. So I was working for the railroad up in the Northwest, up in Seattle. And I was a construction supervisor, traveling the world, and sometimes going up to Canada too. And I was never home, but it was a pretty good salary. I was able to save money to buy primary residence up in Seattle, which is an A-class area, and was never there. And then I just started renting it out. And for a young kid, $2,200 a month rent and $1,600 PITI was a lot of beer money. So I was like, this is it. This is how I'm going to get out of the rat race. Just got to keep buying these things.
That's it. So you said your parents told you to go to school and get a good job, and then, you were there for 50 years. What did they say when you started buying real estate?
They actually don't even know what I do to this day. I mean, I quit my job like earlier this year, and I think they think that I'm like a real estate agent, which is
Okay.
a little annoying, but hey, I don't care. I stopped caring what a lot of people think a long time ago.
Right. Got it. So, okay. So you said PITI. For those of you my listeners listening, can we just talk about what PITI is? So principal, interest, taxes, insurance. Is that about right?
Right. Pretty much everything that's going to go in your escrow payment for the mortgage and debt service for your home.
Absolutely. So sometimes there's terms and people are like, I know what it is, or I don't know what it is. So I just always like to just make sure that everyone's on the same page as we move forward. So what does your portfolio consist of today? And what's your strategy?
So today I am investing in private placements and syndications because I started off with single family homes, got up to 11 of them, and they are great, right? I mean, I was cash flowing a few $100s per property, but with 11 properties, I was just cash flowing $3,000 a year, which is nothing to complain with. But I don't know about you, but I need more than $3,000 to quit my day job and to live comfortably.
Yeah, so. Absolutely. So for the syndication, like how complicated, like are you raising money in a syndication to buy bigger projects? Is that what you're doing?
Yeah, so the syndication is kind of just a general term, right? You're raising money from passive investors to come in as LPs, and you can syndicate anything. You can syndicate a brewery, you can syndicate a development deal, you can syndicate Class C multifamily in tertiary markets that cash flow from the get-go with a little bit of value add. It kind of runs the gambit, but so the syndication, you can raise all the money that you need, or you can just raise the private equity or down payment amount and then get a bank loan on top of that. So all kinds of ways you can do it.
So which way do you do it?
So I like the Class C and B multifamily and mobile home parks in secondary and tertiary markets where you're cash flowing day one. So essentially like a lemonade stand that is currently selling lemonade, but there's something that you can be improved in it. So we kind of raise the money for the down payment, the CapEx, cash reserves, and we get a bank loan, a Fannie Mae, Freddie Mac non-recourse loan on top of that.
Okay, that's quite interesting. And one of I think the big differences, looking at multifamily in the U.S. versus Canada is A, the prices, B, the financing, and you also mentioned the mobile home parks. Not that we don't have any, but ours are more recreational parks.
I see.
So it's quite interesting. I mean, there might be the odd one here and there. I don't necessarily know, but in terms of mobile home parks, I feel like there's definitely many more out in the US versus Canada. And so can you walk us through what, a typical mobile home park investment looks like?
Yeah, we're just a little more ghetto than you guys who actually live in. Yeah, I mean, I think the ones that you're kind of talking about are the more short-term rental ones that I guess I would call those RV parks. They're like for vacations. But like a mobile home park, in theory, they're like a Class D type of housing. People that live there, they make less than $30,000 a year. Their lot rent is, anywhere from like a couple $100 to $500 for the kind of markets that we like to play in. Of course, there's mobile home parks where it's $250,000 in Los Angeles, right? But those weren't cash flow.
No, exactly. You'd have to get in like 20 years ago.
Right. But there's a lot of stigma to it, right? It's kind of sounds like a trailer park. If you watch 8 Mile, Eminem, he grew up in a trailer park, and you think that there's a lot of drugs. But, in anything, when there's a knee-jerk reaction, it cleans the house of, dumb money, or, people get scared. And in anything, you need to look and invest things where there isn't much dumb money or competition. So that's inherently what makes mobile home park investing so lucrative. It's not very competitive compared to multifamily or single family homes.
Yeah, absolutely. I mean, I hear the numbers. I'm like, oh, these are really good. So, I mean, there's a lot of podcasts and discussion on them. So, okay, so let's just talk about your strategy, the syndication, and how you got started. How did you go from buying your properties to doing something to this skill at this point?
Yeah, so I got up to 11 properties back in 2015, and again, I had that epiphany that just wasn't scalable. So I started to learn about apartments. I got a mentor to kind of teach me how to, get started. It is a total reboot. A lot of things are very different. The networks of people is completely different. What you learn in single family home world doesn't quite apply in multifamily, and the networks doesn't carry over at all, in my opinion. But I kind of did the operator school one-on-one. I learned how to underwrite deals. It's a lot more complicated, the underwriting process, and just started to talk to brokers. In multifamily and commercial, brokers control 80% of the deals. The other 20% you don't want to deal with, because my strategy was going after 90% occupied properties or more to get the non-recourse debt. So that was kind of my strategy. And then I realized it was very difficult because I was living in Seattle, because you really have to network with these brokers, build relationships, which I didn't really have the personality for. But my net worth was at a critical mass where I could just invest passively. So I said, screw it, I'm just investing passively, and I'm gonna move to Hawaii.
Very nice. So when did you decide to go the passive route?
I was probably learning it for about 18 months, and I must have underwrote like 100, 200 deals, just wasting my time. I did learn what deals not to buy, and I guess that's sort of valuable, but I also learned about all these other operators in the business who were doing these deals. And that's the major thing with syndications. You have to build your network of other passive investors to find and get into these country club deals. They're not on the internet. You got to get out of your seat, leave your house, leave your computer to find these people. Because a lot of them are done, via 506B offering, where you only can get in if you're in a private network of these folks.
So, okay. So essentially you got to get out of your regular network, find a new network of people, talk to them, build the relationships with them. And then how did you approach the syndication discussion? Like, are they there specifically looking for investment opportunities, or, is that somewhere where you're meeting them at different events, and then at that point in time you guys start talking business? Like, how does that even work?
Yeah, I mean, it is sort of like a meat market. I mean, syndication sponsors are looking for investors. Investors are looking for a place to put their money. So if you go in the right places, you can find all these people. And, a lot of sources are like conferences, real estate clubs. But as a passive investor, it's important to kind of know the numbers a little bit yourself, because in my opinion, anybody can make a nice PDF pitch deck. You as a passive need to know how to sort of, you may not need to know how to underwrite the deal yourself, but there's a certain set of assumptions you should spot check for in doing your due diligence on the sponsor and the deal.
Right, absolutely. So do you think it's important to have the deal first or the investors first?
As from the operator's perspective or from an LP's perspective, I guess?
If I wanted to start a syndication, what would be my first step?
If you wanted to start a syndication, I would jump on somebody else's deal and just kind of work for free. I don't think you should be syndicating other people's money if you haven't really done it before, or you should partner with somebody. I mean,
Got it.
that's what's nice about multifamily or these bigger deals. There's enough meat on the bone where you can sort of fairly divide up the responsibilities and part of the general partnership, to get these things done the right way. And it can be a learning experience for all, or for the new guys.
Right. Okay. So somebody that's new works with somebody that's done a few syndications before, learns the ropes before they go ahead and create their own.
That's correct. Of course, a lot of people who are already successful know that that person's likely to learn all the secrets and run away. So good luck doing that, which is why sometimes it's just better to pay to play.
Right. Okay. Who mentored you in this? Like, how did you find your mentor?
I went through one of these large multifamily mentorship groups. I think if people are interested in, I mean, there's quite a dozen of them. I know them all. I don't really want to quite say on recording who I would recommend, because I think also, depending what you're looking for, some people are looking for different things. Some people are looking to do their own deals. Some people are just looking to analyze deals and be a passive. Some people are, they don't even live near the deals, and yet they want to put it together. It's very different, like what you're looking for. And each ecosystem is built differently. And some are better than the others in certain respects. It's not like there's just one good one.
Right.
And things change too.
Yeah. So what's in the future for you? Like, what are you working on now moving forward?
I'm just on a whole bunch of investors lists, and people send me deals to go into. And so I'm just kind of sitting here and trying to find a new hobby in Hawaii, apparently. And I just try and find ways to get financially free in ways other than real estate. I play around with infinite banking, looking into life settlement investing these days, and just trying to get out of the rat race, right?
Absolutely. So what's life settlement investment?
So life settlements are, it sounds a little bit morbid and a little messed up, but basically what it is you can buy a policy, and when you can pretty much cash somebody out of their policy. And the people you're going to do this to are people who need the money. Somebody who, say they just found out they got cancer and they're going to die in the next 6 months. Well, wouldn't they love to have $200,000 just to take their kid to Disneyland or something like that? Or the sad thing is, like, these insurance companies are pretty messed up, where the statistics are like 70% of these policies, or a good amount, never get cashed in, because a lot of these policies you have to keep paying premiums. So a good chunk of these people never get to see the cash payout at the end, because they starve of money to pay the premiums. And this is why the insurance companies are so rich. They make it that way on purpose. So as an investor, you can come in there and sort of help them out. Sort of just like how you're buying a wholesale property from someone. And I think a lot of people, they get like a bad name because you're buying a property from someone at 50 cents a dollar, where they could just call up a realtor and get the full asking price. But where life settlements is, there's no realtor to call. You are that guy. You're the only option to help somebody out in that situation.
That's actually really unique. I don't actually know if that exists in Canada, that ability to do that, but it's actually really interesting. And maybe if somebody knows that's listening to the podcast, let me know. But is this whole life, or is this like term insurance that you're doing that with?
I think it's whole life. I'm not sure.
Like, is there a value, like a monetary value that like they pay into and it grows and it's like an actual chunk amount? Or is it like, I don't know, $20 a month that they might have started for a certain amount of like 30 years or whatever it was when they started when they were younger? Maybe it's
like it can be structured so many different ways. It's very complicated. Like one of them I was looking at, like you got to put in like $500 a month, and you initially purchase it for 14,000, but if the event happens, you get paid out like 100-something thousand. But the caveat is the guy is not that old and he has this medical condition, but you don't know if the guy could live another 20, 30 years. And old, by the way, the $500 monthly payments do go up at 10% every year. So It's quite the Vegas casino game a little bit, but nothing is more guaranteed than death and taxes, right? And I love real estate. 90% of my portfolio is in real estate, but let's face it, real estate is, it's reliant on the economy. Like
Right.
settlement investing is completely not correlated with the economy. But I don't know very much about it right now. I'm just looking at it, but as an investor and learning from other investors, I've learned that you invest in different asset classes and you always be learning about different things.
Yeah, absolutely. I mean, I don't know how personally I feel about investing in like banking on somebody passing away. It's just my own personal thing, but hey, like,
Yeah.
I can't judge others for doing it. It would be hard. Like, I just don't think I could do this myself, whether it was something that was available or not available. And yeah, I don't know. It's
Yeah.
quite unique.
I mean, I think the way you got to think about it is like, look, if you don't help this guy out, they only have maybe about 10 grand and they're going to burn through their premiums in the next couple years and they're not
Right.
going to get a single dime of that payout.
Yeah. Yeah. I guess there's some potential positive as well.
Yeah, it's not for everybody. Like, just like mobile home parks. Look, it's not for everybody.
No, it's not. And I'm just like, like if you're helping I always look at just making sure that everything is a win-win, right? And so
Yeah.
you got to just
Yeah.
make sure that it's in the right, win option for them as well. So, okay, awesome. So the next part of this,
kind of awkward. Yeah.
hey, that's okay. You know what? It's really the first time that I even hear that that's something that isn't a type of investment.
Yeah.
So,
And that's the thing, like
the US thing.
like a lot of this stuff, like we never even heard about, right? The average middle class never hears about this stuff, but this is what the wealthy do all the time.
Yeah.
Just like infinite banking or just like, investing in private placements and syndications.
Yeah, no, of course. There's definitely tons of different investment strategies. 100%. This one's a new one for me anyways, but probably like not for many people. I don't know. Maybe people have heard about it and it's just, I'm so focused on real estate. Like obviously like, I have some stocks and like there's this brokerage, not a brokerage, but Quest Trade who does like trading and stuff a little bit, like just for play money, but pretty much stops there.
Yeah. I mean, my plan is like, maybe if this market keeps going to year 2023, like maybe I slide 20% of my portfolio into life settlements. That's kind of my plan.
Yeah.
It's a very minority share.
Boomers, potentially. I don't know. This is like, it's like on that fine line between, yeah.
Yeah.
Hey, you know what? Whatever you got to do, if that makes sense for you, that's what matters. Okay, so the next part of the podcast is our lightning round. So I'm going to ask you a series of 5 questions. You're going to give me the first that comes to mind. Are you ready?
Sure.
Okay, question number 1. What is your favorite real estate investing book ever?
I like Millionaire Real Estate Investor by Gary Keller. I think that there's a lot of good academic stuff in there, but I'm really not a fan of books. I mean, I think people read too many books. They should just analyze 100 deals and learn their particular market.
Okay. Number 2, what is your favorite podcast?
I actually don't listen to podcasts too much anymore these days.
No. Don't you have your own?
I do, but that's kind of messed up if I say my own. But I listen to books these days, audiobooks.
Okay.
Like if I'm working on something in my business specifically, I'm gonna look for that book.
Right.
I feel like podcasts are, after you've been listen to podcasts for 5 years, it's just kind of the same spin over and over again. Where I think books, I mean, I don't know. That's just me. I don't drive for work anymore. I don't commute. So
You're living
maybe
in
that's
Hawaii,
probably why.
Clearly you've done something right. Okay, awesome. What do you do for fun aside from real estate?
I like to do CrossFit. I just came a little late because I took too long on my workout just now.
I know. I almost I usually just wait 5 minutes and then the screen shuts down. So you just came in time.
Oh. Just in time. Every second counts is what they say.
You know what? Time is valuable. So awesome. So if you lost all your money and your assets tomorrow, how would you start again?
I would go back to my day job at engineering, unfortunately. but then I would buy a turnkey rental and just start building assets.
All right. Number 5, if you have or somebody has $50,000 and they want to get started, how would you recommend they spend it?
It depends how much net they make every year. If they're a working professional who can save more than 20 grand a year, then I would say go buy a turnkey rental and buy a couple of them. But if they're broke and they only have 50 grand to their name, they're gonna have to get a little more creative and do some BRRRR stuff. So
I love the BRRRR stuff.
I believe you are the BRRRR queen up there.
I love the BRRRR strategy. It's how I scaled using the bank's money, and the financing is a little bit different versus the US, but it's how I did it anyways. But you can have lots of different great strategies. I just personally
I see it work as as a ex-working professional, I never really did it, but I interviewed one of my investors last week, and they didn't make that much money at their day job, but they BRRRR'd their first 5 properties, and they started in 2010, just like me. And today they're worth 1.5 million. So it works,
Yeah, absolutely. Awesome. So Lane, where can listeners find you if they wanted to reach out?
They can check out simplepassivecashflow.com, my website, my blog, and then my iTunes, Google Play. It's on there. Simple Passive Cashflow is kind of my journey on going from turnkey rentals to syndications and apparently strange things like life settlements and etc.
First off, that's for sure.
Yeah.
Any final last words of advice for the listeners?
Understand where you are coming from. Like if I tell a lot of like working professionals with good day jobs that maybe they shouldn't go after duplexes, triplex, or quads. Get the single family homes, get a few of them, and then unload those things after 3 to 5 years and go to the bigger stuff.
Got it. Awesome. Lane, thank you for being on Where Should I Invest? Super excited to have you on, and aloha.
Yeah, aloha everybody.
Thanks so much for listening to Where Should I Invest with your host, Sarah Larbi. Make sure to listen in next time. We'll catch you on the next episode of Where Should I Invest?